Happy New Year, friends! In this video, I'm going to show you my investing plan for 2023 and where I plan to allocate my money for the best returns. There are currently 6 places I plan to invest in this year. Let's get straight into it. So to show you how I'm going to invest this year, I have created a pie chart here so it's easier for you to visualize. I will divide the pie into 6 slices for each of my investments. And I'll make them 6 equal slices since I don't want to allocate a percentage to each slice because they may not be accurate by the end of the year. As an investor, your job is to be flexible and adapt to current and future economic conditions. You will find during the year, different opportunities will come and go. And what you planned at the start of the year may not be the best option. So always be open-minded and pivot your strategy if necessary. So in the first slice, I'm going to be dollar cost averaging into index funds or ETFs. And if you don't know what an index fund is, it's basically a basket of many companies grouped together into one stock. So instead of owning one company, you own many companies within a single stock. So since you are diversifying into many companies, you are also theoretically spreading out your risks. If one company underperforms, then another company will make up for it. Dollar cost average is a strategy where you invest a similar amount of money on a regular basis, regardless of the share price or the economic conditions. Dollar cost averaging into index funds has always been one of my main strategies, regardless of how the market is doing. Trying to time the market has rarely worked in the long term for most people, including the professional investors on Wall Street. So I'm happy to do the minimal work and receive the average return of the market. Whether we're in a bull market or a bear market, I'm always dollar cost averaging into index funds. And they say the most money is actually made during a bear market or a recession. This is because the prices of stocks are at a low and we can buy them for much cheaper compared to a couple of years ago when everything was at an all-time high. So the idea is to buy more when stocks are down with the expectation that stocks will generally go back up in the long term. While nothing is ever risk-free in the stock market, historically speaking, this statement has always turned out to be true. Eventually, the stock market does go up in the long term. Historically speaking, of course. I usually invest into 3 ETFs on a consistent basis. The first ETF tracks the Australian stock market. So this ETF will consist of the top 200 to 300 Australian companies. I live in Australia and I believe in the Australian economy, so I'm betting that Australia will continue to do well in the future. I usually allocate about 30% of my ETF budget into Australia. The second ETF tracks the rest of the world minus Australia. The ASX only makes up about 2% of the global stock market, so I don't want to put all my eggs into the Australian basket. This ETF is made up of 75% US companies. I personally believe that the best international companies are in the US because their products are used all over the world. So companies like Apple, Microsoft and Google are used by billions of people every day. And I don't expect this to stop anytime soon. The rest of the ETF is made up of mainly large European companies, so I do get some exposure from all first world countries. I usually allocate about 60% of my ETF budget into this fund. The third ETF tracks the emerging markets. So this ETF includes countries that are on the rise like China, India, Taiwan and South Korea. It is mainly made up of Asian companies like Alibaba, Tencent and Samsung. But it also has some companies from South America. Basically, this fund is a hedge in case the other 2 ETFs underperforms. At least I will have some exposure if the emerging markets outperform the rest of the world. I usually allocate about 10% of my ETF budget into this fund. So to summarize, I consider this a passive portion of my portfolio. I don't have to think too much about it at all, and that's the way I like it. It's basically a set and forget portfolio that I plan to hold for the next 20 to 30 years, no matter how the economy is performing. Quick disclaimer, I am not a financial advisor and this is not financial advice. The information in this video is for entertainment purposes only, so please don't try to mirror my strategy. Please go consult a professional if you would like financial advice. So moving on to the next slice, I'll be allocating some money into my favorite individual companies. So unlike the previous portfolio, this is more of an active portfolio since I need to take time to research and track the companies that I want to invest in. However, this year I'm going to be super selective when buying individual stocks. Unlike the last few years where every company seemingly went up like crazy, I feel this year and possibly next year won't be very fruitful. And during times like these, you need steady companies that are more likely to survive the recession. During a bull market, investors are willing to splash the cash since everyone seems to have money. But in a bear market or a recession like we are in right now, investors are less forgiving and more frugal with their money. So unless a company can prove their future earning potential, investors are less willing to part with their money. So it is more likely that some companies will go bankrupt with a lack of funding. So I would be very careful when buying individual stocks during times like these. Having said that, for companies with a strong balance sheet and fundamentals that you really believe in, it could be a great time to accumulate some shares at a lower price, especially if they are lumped in with the rest of the market and their share prices are at a record low. You can always find some undervalued gems if you look hard enough. There will always be some bargains in the stock market, but please make sure you do your own research and develop a strong conviction, otherwise you'll be tempted to sell whenever times are tough. Now with individual stocks, I try to have a long-term horizon. Before investing in individual companies, I write down a thesis on the reasons I'm investing into the company. I also like to make sure they have good fundamentals. So for example, maybe they have a good management team that I like, or they have a strong balance sheet, or they are in a growing industry that is likely to continue for many years. Whatever the reason, I'll write it down. And a few times a year, I'll go back and read my thesis and make sure it still aligns to why I invested in the company in the first place. And if I see the fundamentals starting to deviate from my original thesis, I'm not afraid to sell a stock. So maybe the CEO that I liked stepped down, or the business starts moving into a different direction that I don't agree with. Whatever the reason, I won't hesitate to sell if I no longer believe in the company. And for that reason, you should never fall in love with a company and only read the good news. You need to be unbiased and look at it from every angle. For me to hold a stock long term, I need a high conviction. And if I can see the company starting to make me lose my conviction, then I will sell and reallocate into another asset that I feel has a better return in the future. So to summarize, I treat this slice as an active part of my portfolio. This means, unlike my index funds portfolio, I actually spend some time throughout the year actively tracking my stocks and making sure everything is still on track. Although I do plan to hold onto these stocks long term, I am not afraid to sell if the fundamentals or the economic environment changes. I'm not one of those diamond hand bros that blindly holds onto a stock no matter what. But I'm also not a short-term investor who tries to get in and out of stocks for a quick profit. I think being a long-term focused investor who is open-minded and adaptable to change has worked best for me so far. In the next slice, I'll be putting some of my money into cryptocurrency. Yes, I still believe in cryptocurrency for the future, but right now, I'm only interested in Bitcoin and Ethereum. These are the two that I truly believe in and have a high conviction. These two have always been my largest holdings, and the reason is simple. These are the only two that I personally believe is guaranteed to be around in 20 to 30 years. I think out of all the cryptocurrency we have right now, 99% of them will fail in the long term, and the ones left standing are going to be the ones to profit exponentially. If you have previously thought about investing into cryptocurrency, then I think now is a good opportunity for you to do proper research without the FOMO. A year ago, when every crypto under the sun was going up, I'm sure a lot of you felt the fear of missing out and may have rushed into buying without really understanding the fundamentals of Bitcoin and crypto in general. I think crypto will stay flat this year before possibly gearing up for a rise during the next halving event in 2024. And if you do decide you want to invest into crypto, then it's wiser to do so when the prices are lower and not when everyone is rushing in. Look at this popular meme that summarizes how the market normally reacts. This is how human psychology works. People are only interested in buying when the price is already high, so please don't be one of them. Remember, you want to buy low and sell high, not the other way around. It's very easy to get sucked into buying when you see the prices go up every day and you hear John at work bragging about how he doubled his money in 2 days. These are the worst times to be buying anything, let alone a volatile asset like cryptocurrency. So I would take advantage of this downtime and do some proper research and build up a high conviction. This way, if you do decide to invest, then you are less likely to panic sell because you understand the fundamentals and you have a high conviction. For me, I believe Bitcoin will survive since it's the original and first crypto. There are no other cryptos like this, and it's impossible to replicate. I believe Ethereum will survive because of how many projects are already adopting its technology, and they seem to have a good leader that knows what he's doing and for the right reasons. In the last bull market, I was making short-term trades on altcoins and using the momentum to get in and out of certain coins. This was easy to do at the time because everyone had money to throw into the market. But during a bear cycle like we are in right now, I'm staying far away from any altcoins outside of the ones I mentioned. I may start trading again during the next bull cycle, but until then, I'm happy to invest into Bitcoin and Ethereum at these prices. And please note, I said invest, so that means I'm willing to hold on to these assets for 10, 20, or even 30 years. And you need to have the same mentality if you want to invest into cryptocurrency. And please note that while I am bullish on crypto, I am also under no illusions that it could go to zero tomorrow and never come back. Although I do believe it's very unlikely to happen given the progress in the last few years. But it is still a very risky investment, so please do your own research if you're considering investing into it and know what you are getting yourself into. In the next slice, I'll be holding some money in a high savings account. Due to the RBA increasing interest rates, banks are now offering very attractive rates for parking your money in their accounts. I don't really count this as a true investment, but hey, you're getting back 3 to 5% these days, so I'm not complaining. I think there'll be plenty of investing opportunities this year, and I want to have some cash on the sidelines to take advantage of any potential crashes. However, if I don't see any investing opportunities that I like, then I am happy to hold the cash and receive the high interest that the banks are currently offering. And if you are interested, I have made a video about the best high interest savings accounts in Australia, and I'll link them down below. In the next slice, I'm looking to buy an investment property if the right deal comes along. Currently, I do not own any investment properties. I only own the house that I'm currently living in. I am very interested in real estate and I follow all the current trends and news. However, I currently live in Perth and I haven't really seen any good opportunities for me to enter ever since the WA mining boom inflated a lot of the house prices over here. And that was around the time I was finishing university and getting my first job. So it wasn't really a good time for me to invest in real estate. And for this reason, most of my investments are in shares and other assets. But I would like to diversify into real estate this year if the right opportunity presents itself. However, this is not a must. I am not desperate to buy an investment property, but I have a sneaky feeling that we may see some sort of a drop or mini crash in the property market in the second half of 2023. As rates keep going up, something's got to give. Unless the Australian government does something unexpected to bail out the housing market once again. So for now, I'll remain patient and wait for my opportunity. And in my next slice, I plan to invest in my business. So I would classify this YouTube channel as a business since I'm now earning money from it. It started off as a hobby, and to be honest, I would still be posting videos for free even if I didn't get paid. I just love the whole process of making quality videos. However, since I can see now that it can be a source of passive income to support my family, I need to treat it with the respect it deserves. So I've already spent a fair chunk of money on this YouTube channel, including a lot of camera gear and equipment upgrades. This is because when you guys take time out of your day to click one of my videos, I want to give you the best viewing experience possible. So I'm always looking to increase the quality of my videos, whether it be a new lens, some new lights, or a new prop. I'm forever looking to improve. And I have learned in the last few years that camera gear is not cheap. And it doesn't help that I have an OCD personality, so I always try to make everything perfect. So I end up buying multiple camera gear and equipment that ends up lying around in the studio. I also have to pay subscription fees to Epidemic Sound for the music that I use in my videos, and I pay for Canva Premium for all my designs. And there are a few other random software, plugins and apps that I pay for to help make my videos better. And in 2023, I want to keep increasing my video production value, so no doubt I'll be spending more money on equipment and subscriptions. By the way, if you're enjoying this video, then consider subscribing to this channel if you haven't already, so you don't miss out on any future videos like this. And the secret word for today is conquer. So comment that down below so I know you are one of the legends who made it this far. So that is my investing plan for 2023. It is not a strict plan. I'm not forcing myself to follow it to a T. Some of it depends on how the year goes, and I may make changes along the way. But it is a rough guide to what I am currently planning to do. So if you're also planning to start investing this year, but you don't know where to start, then go check out this video on the screen where I show beginners how the Australian stock market works and how to start investing. Thank you for watching, I appreciate you, and I'll see you in the next video.